Hi, welcome to today's webinar. Please let me know if you are unable to hear me or see my screen. Okay, so today's webinar is about breakout news and setup. And before we start, please take note that the webinar should not, everything in this webinar is educational for educational purpose. It should not be considered as an investment advice or investment recommendation. Please do your own due diligence before you proceed any trading. And I'm your host for the day. I'm Emily, investment analyst at EFG. EFG, which is EFG Everest Fortune Group. We are finalists for Best FX Research and also Best Equities Research for the year 2020 and 2021. So today's agenda, we'll be going through looking at some of the key economics events happening this week. And thereafter, we will look at the chart of some of the indices, example like the dollar index and also some other currency pair. So for this week, we actually have quite a bit of wait a second, let me switch my screen. So actually this week we have quite a bit of the economic events. So let's take a look at how they will affect um the market. Yeah, let me there's something with my screen, so I need to all right. So let's look at the news for the US market. Okay, so for today, the unemployment claims data will be released later today. While often considered a lagging indicator, the number of unemployed people is a signal of overall economic health. And unemployment is also a major consideration for a country's monetary policy. It will be the data will be released at 1:30 p.m. GMT time. Okay, so and let's look at the US market because yesterday, the ADP non-farm employment change data was released also. So it kind of affected the dollar index, okay, because of the actual figure falling short of the forecasted. Um, it wasn't as bad as expected, but we still need to monitor a bit more because of the data they'll be released tonight. So most likely the DXY will be affected by the upcoming unemployment claims. Okay, so if the result is dovish, we could have potential bearish reversal. So in today's session, we also can see that the dollar index is losing momentum from yesterday's trading. Okay, so we also can kind of expect volatility in the markets due to the high impact news that will be released later during the day. Then next we will look at Australian dollar. Okay, the interest rate decision and also the GDP quarterly data was released on the 4th and 6th December respectively. Okay, and based on the GDP quarterly data, the Australian economy rose 0.2% in seasonal adjusted chain volume measures. So in nominal term, the GDP saw a rise of 1.2%. Okay, and meanwhile, there was a 2.6 decline in trade, in terms of trade. And the household savings uh, to income ratio also decreased from 2.8 to 1.1%. So you can see the Australian economy also did not perform well for the last quarter. And it also affected the Australian dollar. So the AUD USD pair, sorry, has been falling in the US season. Okay, so we are expecting the price to come down a little bit more, and the next meeting will be on, I think, will be in due next year, 6th February. Okay, so now let's look at the Canadian dollar. Okay, because the Canadian dollar, for the Canadian dollar, the BOC, Bank of Canada, actually released the rate statement yesterday. Okay, so they decided to maintain the overnight rate at 5%. Okay, and also the bank rate and the deposit rate also at 5%. So the bank is persisting its approach of quantitative tightening. And they also have another smaller data, I guess, in released yesterday. It's called IVPMI data. Okay, it is also the actual result is also lesser than expected, which could have a negative impact on the Canadian dollar. So later on, we can take a look at the currency pair and see how is it performing. And upcoming tomorrow, we do have, oh, actually it's later today, we have the Japanese yen. The Bank of Japan will be releasing their GDP. And for the euro, okay, they will be releasing the Germany CPI on Friday, tomorrow. Okay, and actually yesterday the for pound, okay, the construction PMI data was also released, and the actual data is also um lesser than forecasted. Okay, and we can see the impact is reflected on the pound dollar pair. Okay, and also yesterday, the governor of Bank of London, actually, Governor Andrew Bailey also held a press conference for the financial stability report. Okay, he stated that interest rate in Britain will likely need to be maintained at their current level for an extended period. Okay, so most probably the interest rate will not change. Okay, for a while. We Maybe you can wait for the next meeting, which is on the 14th of December, to see if they will reverse this decision. Okay, so now let's take a look at some of the charts to adjust this. Okay, let's look at the dollar index. Okay, so we'll first look at the day chart. Um, let's try to find some key support and resistance level. And from the day chart, we will move to the H4 and H1 chart. Okay, this can be a good level of resistance, okay, because of the dip right here. It's a very strong pullback level. Okay, we have a second pullback here. I think I would take this instead to be my support. If not, you'll be too close. Okay, let's see if there's any Fibonacci. Okay, so the first resistance level is right on the 38.2 retracement area. So this acts as a pretty strong support for the first resistance level. And also for the first support level, it coincides with the 61.8 retracement area. Okay, so price will most likely uh rise up to the first resistance before coming back down to the first support level. Okay, let's move to the H4 chart. So for the H4 chart, it's also pretty similar. You can see the price has started to come down. Okay, moving away from the first resistance and the Fibonacci retracement area is coming down, back down to the first support area. Okay, so let's look at some other currency pairs. Like, okay, look at the euro dollar. Okay, we will also start with the day chart. Okay, this will be my first level of resistance. Small little pullback here. And my support level is pretty far, yes. I will need to draw some Fibonacci to determine my support level. I think this will work. Okay. I'm going to use this as my support. Okay, so you can see from this chart, I'm gonna remove this Fibonacci first. Let's see. The current price is right on the 38.2 retracement area. Okay, so there is a immediate support level over here. Okay, and let's see if the price will be strong enough to bounce up and move back to the first resistance area. Okay, and this can be our second level of resistance, the 78 Fibonacci retracement area. Okay, and we'll take a look at the H4 chart. You could also draw more support line, more Fibonacci retracement area here. Let's see if there's any more significant levels that we can take note of. Okay, so I can use this as my second level of support. Okay. As it's in line with my 78%, 78.6% Fibonacci retracement. So I can use this as my support level. Okay, let's look at the pound dollar. Okay, this will be a support level here, a pullback. Okay, my resistance, which is a multi-swing high. You also have another resistance level here. And this will be my first resistance. Okay, this is the second. Here will be my second support level. Okay, and let's see if there's any significant retracement or extension level. So, okay, to go to the day chart, it would be better to draw it at the day chart. So you can see that for the first support level, it aligns with the 38.2. Okay, so I'm going to highlight this area. So this area will be my area of support. So when the price bounce, okay, it's not just on this line, but it's actually this whole area will be my support level. So there's a possibility that even if price were to come to this level, the price is able to bounce back up and not break through the support level, the support area, because it's an area of its own. Okay, so if you have a first support and if you have a support or resistance that aligns with a Fibonacci retracement close by, you can draw an area. You can highlight the area. Okay, so for a second resistance level, it aligns perfectly with the 61.8 retracement. Okay, so it doesn't. Okay, after switching to the, sorry, give me a second, to the day chart, the first resistance level is kind of off. Okay, but only works for the day chart, for the H4 chart. Okay, next up, we will look at the dollar and Swiss franc. Okay. I'm gonna make the chart smaller so I can draw. I will use this instead because this is a pullback. This has not much of a significance. Okay, this is a better support level. And over here, you also can see the price has bounced off. So I'll be using this as my first level of support. And here will be my resistance. Okay, now we switch to the daily time frame and to look for any retracement area. This would be too far for a support. Next will be at the 100. I could use this as my second resistance. Actually, I can use this. Okay. I'll be taking this as the for the second resistance. First resistance, I'll shift it up to the 61.8 retracement area. This is too far. I will switch it back to the H4 time frame. Second resistance. I think I'm still gonna use this because I want to capture this back. Okay, this swing low and when the prices bounce up. So I want to be able to capture this line, hence I'll be using this as my second resistance. And I think this will be a little bit too far. So we can see the current price is neutral. Okay, it's a bit undecided whether the price will go up or down. Okay, it looks like it is heading towards the support level, but the market is still quite undecided. Okay, next up, share dollar yen. Okay, I'm gonna use this as my support area, the pullback. And my resistance level here. Okay, switch to the H1 chart because I'm not able to find any more support and resistance lines. So I've got to use the Fibonacci. Okay, the prices are also quite far apart. Use. Okay, can use this as my second support. You can see the price has started to come down, has broken through the first resistance and also the 78.6 Fibonacci retracement area. It's coming down, touching the first support. Okay, next we will look at the dollar CAD. Okay, I will use this as my first support level. Okay, make it smaller to see if I can connect any more weeks. Yeah, I don't think there's any more support levels. So, and my resistance. Okay, I'll be using this. It's a little bit far. And once again, let's look for some potential retracement area. So for the first resistance, you can see it's kind of aligned very close to the 38.2 of Fibonacci retracement area. So we can make this area of support. So this whole area will be our first resistance area. And we can use this as our second support. Now, second resistance will also be here. Right on the 23.6 retracement area will be our second level of resistance. Okay, so you can see the price is already in the resistance area, has been. Okay, so if you were not, if you did not extend the area, we will not know that actually the price has already entered the area of resistance, and there's a possibility whereby the price will pull back, okay, and drop down to the area of support. So you can see here, the price has touched the resistance area and has pulled back, okay, coming down to the look. It looks like it will come down to the area support area. Okay, now we look at the Aussie dollar. Okay, we have a immediate support here. Mhm. This will be my resistance. Okay, this one is an overlap. Okay, pull back and pull back. So makes an overlap. My support will be here. Okay, and we will go to the day chart once again to see if there's any significant area. Okay, I can see the 78.6 retracement area is here. So I'll be using this as my second support. Okay, and also we'll be highlighting this as one immediate support area. So I'm connecting the immediate support with the 38.2 retracement area. So you can see the price is in the retracement area, it's in the support area now. Okay, so there's a possibility the price will bounce, or actually it looks like it's going down some more. Looks like it could break through this level, okay, and move all the way down to the first support level here. Okay, next we can look at some, okay, we can look at oil. Okay, here's a very nice support area. You can see multi-swing low, and there's pullback. Resistance level. This is a very small resistance level. You don't have retracement area. We can look at the page 4 chart. Let's adjust a bit because I was drawing on the daily chart. You can see the price is falling quite sharply all the way down to the first support line. So on the shorter time frame, okay, this not able to draw the support. I mean the Fibonacci area here. It's okay. So you can see that for oil is on a downtrend. Okay, let's look at gold. Okay, first resistance here and my support. This one also. You can also use this as swing high resistance. And this will be our second. The next support level is pretty far. Okay, I can use this candle here. You can see the price touches this level and bounces up. Okay, take a look at the day chart. Okay, so you can see the first support and second support level is actually right on the 23.6 and also 38.2 retracement area. Yes, this is a little bit too long. And it's out of the trend line. Okay, so it's not a very good retracement. Okay, I have switched to this as it aligns more perfectly nicely with the trend line. It is okay, this downtrend here. And our support, first the support level, okay, is on the 38.2 and also 61.8 retracement area. Okay, so let's look at the H4 chart. So you can see the price has gone down. Okay, it's pulling back from the first resistance, and there is a possibility whereby it could bounce off. Okay, so actually this area has already bounced off the retracement area. It's moving back up towards the first resistance level. Okay, so now we'll look at oil. This is different. This is the oh sorry, we have already looked at oil, WTI. We look at the S&P 500. So you see the price is almost at the all-time high. So we have only one resistance level, which is the swing high. Okay, this is my support level. It's an overlap support. Next support will be pretty far away as this area is so empty. Okay, next. So if price were to come down here, were to break the first support, it come down pretty far. Okay, it could fall all the way down to the second level of support. Okay, let's switch to the daily time frame. Okay, so as you can see, the Fibonacci retracement, okay, is very close to the second support area. And I'm gonna put this into the one area. So in the event whereby price break through the first support, okay, it will fall. There's a high possibility the price will fall all the way down to the second area of support. Okay, and the next one after the second area of support, it will be this area, the 38.2 Fibonacci retracement area. Okay, so we'll look at one last one. Let's look at German 40. Okay, so for German 40, it has also reached an all-time high. I'm gonna just take this week as my first resistance. Okay, my first support will be here. It's a very nice pullback. But to go to the day chart. Adjust my. As you can see the areas is also very empty. So my next support will be here. Okay, the next pullback. Okay, let's switch to the day chart. Okay, so as you can see the day chart, the second support also aligns, also forms a area of support with the 38.2 retracement area. Okay, so this is a very nice area. So the price is neutral, I would say. Okay, the market is a bit undecided. It's hovering in between the first support and also the first resistance level. So for stocks like this, there's a possibility whereby when the price come down, okay, go down pretty far down, okay. Okay, so that's it for today. Okay, and I'll see you guys in the next webinar. And trade safe and have a great day ahead. Thank you.